The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, taking a look at Monday's trade action, we found some green on the screen led by the wheat markets, moderate gains in corn and soybeans as well, although we did finish a bit off of session highs, and it was another good day in the cattle market on Monday. Largely a good rebound from the sell pressure we saw on Friday. Let's take a look at what's happening in this market trade as we get into the first full week of trade for 2025. John Heimberg with Total Farm Marketing joins us for our analysis. John, happy New Year, my friend. Hope all is well. Thanks for being with us.
Yeah, good to be back. It's been a couple of weeks here as we caught the holiday time frame. So come back with a little bit more strength in the grain markets to start the week. So
yeah, and it was kind of interesting, and I alluded to Friday's sell-off. I mean, it was a pretty tough day Friday to close out last week. And then I looked at the overnight trade into Monday's morning session, and I said, man, we got some real good strength here as we're getting back to a full week of trading minus Thursday. I know we'll have a slightly shortened session for the day of mourning for President Jimmy Carter, but I mean, overall, pretty solid day. We got a USDA report, though, coming up Friday that's going to be a big one. I guess I have to wonder, is this a little bit of positioning ahead of that report? Was it just a money flow thing today? What's your thoughts on the grains and oilseeds, John?
Yeah, I'm trying to kind of figure out here a little bit too, which day was the head fake, as we like to say. It was the hard day Friday, the new trend. Obviously, we did put some pretty ugly looks on the charts in terms of daily charts, weekly charts. Market was overbought, so it was due for some type of correction. Then we come snapping back today, with the exception of the very front end months. Most of the trade action today was an inside day. In other words, trading within the highs and lows, of the previous day. And that's the same thing also over in the cattle side. With the price recovery there today. So it kind of left me scratching the head all day today. Now, realistically, if I'm bullish soybeans, the fact that March, falls back under $10, losing 12 cents off the high on the day would be kind of disappointing to me, with that technical side being broken back to the downside again. Obviously, we're still keeping an eye on what's going on with weather. March corn, good day today. We had a big reversal, and we just found a way to tick above it on today's session. But then you got this 460 area that just seems like a bit of a barrier. And realistically, if you go back and compare some charts here or some time value, last year's February low in March 25 corn, when we put the low in the corn market, was 459.5. It just seems to be a spot that's kind of sticky here or right now. So again, I think next couple of days will be very key. You mentioned the USDA report coming here on Friday. I think there is some positioning going into that. We'll also get commitment of traders for back to Tuesday, the new day, New Year's Eve day. So we'll see at least maybe where the money flow is. A little hard to gauge it when the report's off by a couple of days. Going into the end of the week. And one other thing too, this is also when we see some of the future index holders kind of rebalance their portfolios here over the next couple of days. So that could just trigger some money flow into the market. So I think it's going to be a choppy week. Again, mentioned shortened day a little bit on Thursday, and then we got a USDA report on Friday. So I kind of really trying to figure out where this wants to plan. The biggest thing I'm talking about customers about is, where's your risk, and let's protect that risk one way or another, whether it's the upside or the downside here.
I also wondered, the way we started the session Monday and then the way we finished, particularly in corn and soybeans, maybe some farmers selling came back in. It felt like that largely kind of dried up on the break last week, but maybe some folks said, okay, hey, this is my second chance, so to speak, and maybe took advantage. I don't know. What do you think, John? Have you heard anything there?
I do think that's part of some of this in here too. I talked with a friend of mine from an elevator the other day, and he made the comment to me. He was very surprised how much corn has not been sold in this window. They were just still dealing with a lot of corn that was pre-booked and things of that nature. And guys are still fairly tight-fisted, at least in his area, in terms of moving bushels out. So again, like I said, we had the rollover. I scared some people, and here we get a run back today to give you that second chance, and maybe that triggered some movement. I think also the early session today, there's some outside market things that were really an impact today. We had that strong break in the U.S. dollar and the overnight, kind of tied to President Trudeau resigning in Canada, and a strong move in the Canadian dollar against the U.S. dollar, triggering some profit taking there. Then we had crude oil just all of a sudden run up and challenge $75 a barrel today before rolling over and turning negative. So all those factors, I think, came into play. I didn't mention the wheat market in that first initial. That strong dollar move is what probably fueled the wheat recovery. But again, just like, corn, soybeans, for the most part, even the wheat move today was within Friday's range. So realistically, the charts are still weak. Technically, with a good up day, tomorrow will probably be the key. Do we hold or do we fade, or we just continue to grind? My hunch is we probably continue to grind until we see that report on Friday to give us basically the new goalpost setting for the next 2-3 months.
And there's going to be a lot of data in that report, that January WASDE and the accompanying reports, winter wheat seedings, canola, always very volatile. So let's look at this grain market from a managing your risk standpoint here. Starting off a new year, a lot of data going to get thrown our way that can have a lot of impacts either way on the market. So what's the biggest things you're talking to clients about here, maybe early this week, trying to get themselves squared up, positioned, and whatever the case may be ahead of a big report like we're going to see on Friday?
Yeah, I guess the first question you ask yourself is, what is my risk? If we got guys still sitting a lot of bushels in the corn market, dealt with that a little bit on Friday with the price breaking, some fielded a few phone calls. Hey, I've got this corn. I'm not really pulled the trigger, but I want to make sure I don't lose this. So, puts were cheap. What's the next window now to March? So you're looking at a March put today at the money, 10 cents out of the money. You're talking a dime or so. That's a cheap piece of insurance to give you unlimited upside for your bushels, but still lock in some gains here. That expires February 21st. So it's not a long-term position. But if we're going to make a move, it's probably going to happen sooner than later based on either the Argentina weather or positive report that can maybe give the corn market one more leg higher. So that's what we're talking about in that regard. 10 cents of risk to lock in a 450, 460 floor versus unlimited upside with your bushels sounds like a pretty cheap play. Soybeans gets a little bit more difficult because the cost is still there. Even though we got this Argentina weather, we have a market that is sitting in a position where there's going to be a lot of volatility to it. Prices overall may be cheap, but big supply still coming. If we get some drier forecasts, do we see things pop a little bit more there? But at the same time, even if we get a friendly report on Friday, we're still going to have a carryover that's probably going to be double plus of last year. Plus is still, even though we could lose some bushels due to extended dry weather, still going to be bigger combined South American production than last year. So it's going to be real hard, I think, for that market to want to kick in. Again, a driver, and I think it was a driver in bean prices today. We had a strong start to soybean meal, $6-7 a ton higher to start the session. Unfortunately, we just couldn't hold those gains, and prices faded to a negative side on the close. So feels like that's a toppy spot. Soybean market kind of drifted right with that today, even though we held gains significantly off the highs. So how do we protect there? Short-term puts, continue to put them underneath the market. On the flip side, again, what if we've already made the sales? I like the March calls here, or February calls for soybeans. Realistically, corn, we're going to know in the next 5-6 weeks off of this report what's going to happen. Where's the next leg going to be? Soybeans, it's probably even going to be less than that. We're going to know by the 15th, the 20th of January when we get those South American weather forecasts if this market's ready to run or if this market's peaked out again, as the rains may be returning to that region. So again, short-term options right now, just to kind of make sure you're protected through this report, whether you've made sales or you got bushels to sell yet. There's a lot of easy option plays out there just to get yourself at least some type of management on that risk going into the Friday's numbers.
And I think, too, with the corn market, we saw the December report. We had some changes there on the corn balance sheets. Some folks have talked about that rapid dry down we had can maybe affect the final yield from last year, et cetera. So I guess I'm wondering if we're going to see the big corn moves potentially on Friday's report.
That's kind of the one I'm watching the most. Soybeans, we know what they're going to be. Yeah, they can make some adjustments, reduce the yield, tighten up increase the demand because things have been pretty good. But we're still got a lot of supply. There's still going to be some limits to that rally. On the corn side, we've seen now for a handful of months, consecutively dropping that carryover. Now we're down to 1.738. If we do see a little bit of a yield adjustment, now we come lower. The question will be, do they make demand adjustments here? They made such a big move on that December report that they could probably sit on the sidelines here, especially if they make a yield cut on that regard. So, if they tighten supply, they're probably not going to increase demand maybe on this report just because of that tighter supply demand balance that they like to have. So we'll have to see how that plays out. Maybe they can. The only thing that's a little concerning, and obviously I know we're dealing with the holiday window, things of here. We got export inspections today. We got poor sales last week. I know you said the holiday is probably a big factor in it. But if you look at those export inspection charts for both corn and soybeans, they're starting to round off a little bit here in terms of things getting moved or sales getting put on the books. That maybe we're starting to see that demand start to slow down as prices have lifted with that strong dollar. Our competitiveness is getting pretty tight now in terms of some of those other supplies, and that might be still a limiting factor. But if we come back and we see that corn carryout number get under 1.7, yeah, there's some room for this market to go. Right now I think we're fairly priced at 450 window for 1.74, rounding the numbers. If we get under 1.7, that's probably 475, 480, with a possible top side to $5 if weather or something comes into play or demand re-kicks in. So it's going to be an interesting day. Now, the sleeper on Friday's report in my mind is going to be the grain stocks number. And that one may be actually the more important number. We're going to see the carryout, we're going to see demand, we're going to see, we're going to see the bushels and all that fun stuff on the supply side of it, supply demand side. That grain stocks number, where we are compared to last year, what was the disappearance in the fourth quarter? What was the feed demand in that regard? We're feeding some big carcasses out there right now for cattle. Even though numbers are down, we're putting an extra 20 pounds of carcass on. So that takes fuel to do that in terms of feeding corn. Then also on the other side of it too, that'll also give us that last little picture in terms of maybe where last year's old crop supply is in relation to the new crop supply. So there might be a surprise in that number that maybe that grain stock number is a couple 100 million bushels less or more than the market's anticipating. And that might be the side that could really move the market. It's going to be the physical supply that's out there on the grain stocks number versus the production estimates.
John, you mentioned cattle. Let's talk about those real quick. We had a good move back to the upside in futures on Monday. Cash just doesn't seem to want to quit here. Really strong week last week. It seemed like maybe Packers were a little short bought. What's your view of this cattle market right now starting off the new year?
Kind of mixed right now in my mind. Again, it's another one of those markets you're waiting for the shoe to fall like we've seen in the hog market. We got the indications that are out there in terms of the softness of trade on Friday, but then here we come again. Now, February did get above Friday's reversal high, so that does kind of keep it open. Historically, February can kind of climb into the end of its contract life here, especially if that cash market stays strong. We're hearing that $200 number getting thrown out there. I know some guys that got that number traded last week. In terms of cash, are we getting to a cash seasonal high? That's something we're watching here, but it sure feels like the Packers are still keeping active. So that'll be the key in the front end of this market is cash is king at this time frame. But again, funds are sitting on their largest long position. We'll get more picture on that today with the Commitment of Traders report. That largest long position going all the way back to the 2019 run, and we're probably within 15 to 20,000 contracts of that total. And unfortunately, that ended very, very quickly and aggressively when we hit that number and the funds decided to roll over. I'm a little concerned that we do see a fundamental rollover or just a technical rollover in this market, kind of like we've seen in the hog market, now trading about $11 off its high on the February contract just because we can. So that's something I'm watching going forward. On the feeder cattle side, too, that market continues to be strong. Cash prices are strong. I mean, you look at the index, 268 on the index, trading a couple bucks above the board. So that keeps some buying strength in there as that cash market just keeps rolling. My only question is, when do we get the headline that says the Mexican feeder cattle are free to come back in because of the screwworm, basically export ban right now or import ban? That could bring a lot of cattle to the pipeline pretty quickly. That could be the signal of the end for the feeder cattle market as well. So that's a headline risk that's out there. So for cattle, puts are still cheap. You got great value here all the way out till 2026. Try to figure out some form of operation to protect these gains here. Because like I said, in that hog market, here comes the technical selling in the last couple of weeks. We saw a pretty quick drop in prices.
John, good stuff as always as we close it out today. Anything final you'd share with folks as we wrap up the show?
Again, just always assess your plan, see where you're at. Don't forget about next year, doing some 25 work in this window as well already for corn. Just make sure we're keeping the risk in front of us and what can I do to protect it? We've said it before, sometimes the cost of doing nothing is a lot worse, the cost of doing something is a lot worse than the cost of doing nothing if the market were to move aggressively against you.
John, if folks want to reach out and talk with you there at Total Farm Marketing, I know a few ways to get in touch. How can they get a hold of you?
Sure. Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget the website, totalfarmmarketing.com.
Always good to chat. John Heinberg, Total Farm Marketing, thanks for being with us. Have a great week. We'll talk to you next week.
Sounds good. Have a good week.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.